Hello, this is my presentation on the business analytics for the clothing retailing in UK. So we will discuss about clothing retailing in UK, company overview, business metrics, data visualizations, static summary, predictive analysis, conclusion and recommendation, and references. So the first of all, with this clothing retailing in UK, so there are the different retail shops which take goods from the producers and sell them to the end of the consumers. And we can see that the women clothing has the highest market share, followed by men clothing, children and infant clothing, delivery options, and accessories. So I have taken five companies: Next PLC, Primark, New Look, M&S, and Boohoo, which all are retail company dealing with men's and women children clothing and providing different accessories and makeup product also. So I have taken six different variables: gearing percentage, long-term debt, turnover, number of employees, solvency ratio, and total assets. And or in this, the five are dependent variables, which are turnover, number of employees, gearing percentage, solvency ratio, and long-term debt. And one is independent variable, which is total assets. And the data is collected from 2015 to 2024. And this is the visualization in which I have used one bar graph, one pie chart, and two line graphs. So this is the visualization of intercompany performance by using the bar graphs, and we can see that the Primark, Next PLC, New Look, Boohoo, and Mark M&S are five different companies whose total turnover and long-term debt are shown in this graph. So New Look has the highest turnover and significant long-term debt, which are indicated by the tallest blue bar. Boohoo has less long-term debt and the second highest turnover when compared to New Looks. Mark and Spencer, Next PLC, Primark, all are long-term debts and they are different better than the Boohoo. Additionally, their bar are significantly shorter. This is the pie chart, which is help in comparison of average asset base solvency ratio among retail companies. And we can see that with the highest average asset base ratio of 35.82, Marker and Spencer appear to be in the strongest financial position to pay off its long-term debt. And with the ratio of 35.41, might come in second. The ratio for next PLC is 20.67. Out of the four companies, New Look has the lowest ratio, which is 15.65%, and the ratio for Boohoo is 33.13%. This is the visualization trends over time. So this is the line graphs, and in this we can see that the next PLC show a strong and consistent upward trend. M&S show a declining trend until 2021, for which after which they appear to have started their turnaround and appear experience a notable recovery and advancement. Boohoo showed us general upward trend until 2021, after which it experienced a minor decline and has not since recovered somewhat. Primark display a steady upward trend in turnover with a noticeable drop around 2020, and New Look show a consistent downward trend in turnover from 2015 to 2021. This is the next line graph for total assets over a period of retailing companies, in which we can see that the Boohoo, the company total assets increased significantly, and for newly the asset of this business varied, but they saw a significant rise from 2020 to 2022. Before after that, it get declined. Mark and Spencer, the M&S overall assets have fluctuated over a period of time, and which in 2019 it was at peaks. New Look following a peak in 2016. The next PLC assets have generally been declining, and for the Primarks over the course of the period, Primark total assets have stayed largely stable. This is the static summary in which there is a descriptive statistics in which we have calculated mean, median, standard deviation, mode, range, and count by using the Excel function. So the mean, median, mode measures are show the central tendency for many variables. The mean and median differ significantly, indicating an asymmetric skew distribution. The higher range and standard deviation value indicate significant flexibility, both guiding a more in-depth analysis and offering a quick initial comparison of the dataset depend on this status. After that, this is the correlation, in which the correlation play an important role in finance because they are used to forecast future trend and to manage the risk within within a portfolio. So for long-term debt and turnover and for total assets and number of employees, the correlation is 0.49 and minus 0.58, which indicate a moderate negative correlation. Number of employees and turnover, the correlation is minus 0.60 with a strong negative correlation. Long-term debt and gearings indicate a very weak negative correlation. Total assets and turnover indicate a strong positive correlation, whereas number of employees and gearing and solvency ratios and gearing shows a very weak positive relation at 0.0469 and 0.0339. This is the regression, which is also an predictive analysis, in which we can see that there is an equation which is y equals to intercept plus coefficient of gearing plus coefficient of long-term debt plus coefficient of turnover plus coefficient of number of employees and solvency ratio. According to this model, more employees and higher gearing both have negative effects, suggesting that workforce size and financial leverage may lower the firm performance metrics. Since the other variables do not exhibit statistically significant effect by using the p-values, they are not more suitable to interpret any result. This is the managerial decisions according to the data sets and the visualization and making mean, median, mode and regression and correlation. So we can find that the workforce should be optimized. It doesn't mean that higher number of employees always lead to higher revenue. So to avoid labor cost harming financial performance, organization should focus on the appropriate number of employees. The next is asset management for revenue growth. As we can see that there is a direct relationship between the assets and the turnover. So more assets could lead to more turnover. So they should always focus on the assets management. So the next is risk mitigation and solvency. So for the long-term debt, the solvency, the liquidity ratio should be high so that they can pay their long-term debt more easily, and the risks should be reduced. And the next is tracking trends in turnover. So they should always track their turnover so that they could work more efficiently and effectively. The next is where should the management should focus. So the first one is utilization of resources. The resources should be more appropriate, which can help in investment in the physical and digital facilities and the control over solvency. So the liquidity should be higher so that there is no burden on the management to pay off their debts. The revenue and debt relationship. So the revenue should be higher and the debt should be lower so that they could not affect the financial leverage on the long-term success of the firm. The next is analyzing trend. So that if the trend are analyzes, so it will be helpful in forecasting and proactive strategic planning. The next is conclusion and recommendation. At the end, we can conclude that the analysis evoke the important upon the clothing retailing performance by depth level, workforce size, and operational productivity and assets utilization. And we can see that New Look is currently having trouble with the debt level and declining turnover, while M&S and Primark demonstrate solid solvency levels and assets utilization efficiency. And correlation analysis suggests that operational efficiency of retailers is an important component to performance. And as a result, the recommendation could be like they could optimize their debt levels so that there will be no debt, and it will be not a burden for the companies, and they could prevent debts. The next is asset investment strategies. If they utilize more on the assets so that they can make more money, and the turnover will automatically increase, as we have seen that there is a relationship between assets and turnover which are positive. The solvency and management. So the management should more focus on solvency ratio, and they should have a good cash flow and keep cash reserve to minimize financial stress. The next is continue review and trend analysis. If they continuously review and they can analyze their trend, so it will be helpful in their prediction and forecasting and minimizing their cost of management. So these are the references, and thank you.